So I made a big mistake, and it's never easy talking about your mistakes, but some mistakes must be talked about so that other people don't go out there and make the same mistakes. And on this channel, I've always talked about like investing consistently, starting out with what you have right now and then increasing the amount that you invest. And also on this channel, I talk about investing responsibly, meaning that you don't go out there and invest all your money into risky new companies or risky cryptocurrencies, but instead you go out there, you look out for those investments that have been proven to consistently provide positive returns for years and years or decades and decades. And so I already looked at this stuff, I already did the research, and I already did my due diligence. And then I decided that I was going to invest in ETFs, and I was going to invest in like the S&P 500. I was going to invest in REITs. I was going to invest in large cap ETFs, small cap ETFs, emerging markets, the total international stock market, and all this stuff. And I've been consistently doing that. And I've been taking this seriously for the past 3 years. However, recently this year, I just had the feeling that the stock market was going to be going down, and I was right. I was right to a certain extent, and I'm probably still right because I saw the market going down, and so I thought to myself, well, if the market is going down and I think it's going to go down further, then I should stop buying because I don't want to buy it when it's high. Instead, I want to buy it when it's low. So I said, you know what? I'm going to pause my investments. And I decided that it was smarter to stop investing right now, stop dollar cost averaging right now, and just take a break from it. And then when we were close to the bottom, or when we were at the bottom, or when the market bottoms out, then I would start dumping tons of cash into the market. And that way I could ride the wave back up and I'd make a ton of money. And I thought that was the smartest thing to do. But I actually missed one key important point. And that point is that I have no way for sure, like being 100% sure when the stock market is actually going to bottom out. So for all I know, it could be tomorrow, it could be next week, it could have been last week, it could have been yesterday, it could have been last month, or it could be like 6 months from now, but there's no way for me to tell when the market is actually going to bottom out. Now, comment below and let me know if you've ever been in a situation where you thought about all the pros and cons, you went over all the variables, you did your research, you did all your due diligence, and then you made a decision, and that was in fact the best decision, and then for some reason you had some doubt or you had some new idea and you went against all the data that you had, you went against all the research that you did, you went against all the due diligence, and in the end you end up regretting your decision. So you ended up regretting your decision, and then you thought to yourself, well, why did I change my mind? Why didn't I just stick to what I already decided? Because when I decided, or when I made that decision, I already had all the facts, and that is how I came to that decision in the first place. So why did I go against it? And this is kind of what's happening to me right now. But luckily, right now, the market is still down, so I haven't lost out a lot and I can still buy in. But here's the thing. You don't actually make money when the stock market is going up. I mean, yes, your balance is going up and it looks good, you have more money, but you're actually making the money when the market is going down. Because the aim is to always buy low and sell high. So if the stock market is going down and you're not buying, then essentially that means that you're going to start buying when it starts to rebound and when it starts to go back up. If the price is going up, then you're buying. And at that point, you're not getting the lowest prices, or you're not getting it close to the bottom. And so because you don't know when the bottom of the market is coming, then you might as well just keep dollar cost averaging in while it goes down. Now, most likely I've said this before, but this way you get the average price paid. So you buy high, you buy low, you get the average price paid, and then that way you don't have to worry too much about this stuff. And so earlier on this year, I made a video about why I paused investing. I said I wasn't going to invest anymore in the market because the market was going to go down more. And now I'm realizing that even though I was right about the market going down, that was actually a mistake. And I'm here today to tell you guys that I made a mistake. And hopefully if you've made the same mistake that I made, then maybe you can rethink it. But again, it's like if you already thought about something, if you already considered all the variables, you have all the info, you did all the research and you made a decision, then you shouldn't go against that decision that you made in the first place when you had all the info. So with that said, starting right now, I'm going to resume dollar cost averaging into the market even while it goes lower, because again, I want to always buy low and sell high. And although I don't plan on selling any investments for years or decades to come, while the market goes lower, while the Fed decides to raise interest rates or, whatever else happens and the market goes lower, I'll still be buying and I'll be averaging down the price off any investments that I'm actually purchasing. So the main idea here is that I don't know when the market's going to bottom out. I don't know for sure if it has already done that, or I don't know if it's coming soon. I don't know if it's going to be next year. I don't know how much longer it's going to keep going down. But I do know that if I keep buying and I keep getting the average price paid lower and lower for everything that I invest in, when the market rebounds, I'm going to end up winning. So that was actually the big mistake that I made, and I realize now that it was a mistake, and I'm here telling you guys that I made a mistake. I'm being completely transparent because I did make that video a couple months back saying that I stopped investing. I'm only making this video for all the people that are long-term investors as just a reminder that this is a long-term play, and the research and the data always shows that if you're in the market and you're going to be in the market for 15 plus years, then it's always better to dollar cost average throughout the crashes, throughout everything. And so at the end, the market will recover and you'll be okay. Not financial advice, but you should be okay. So again, luckily the market did go down and stay down like I expected and is still down. So I can re-enter without missing out too much in terms of the lowest price points. And as it goes lower, which I still expect it to do, I'm gonna keep buying and I'm gonna ride the wave all the way down to the bottom. And then I'm gonna ride it all the way back up, even if it takes 2 to 3 years. So with that said, comment below, let me know if you're doing the same thing, and also let me know when you think we're gonna hit market bottom or how long we have before hitting there and seeing a rebound in the market. And as always, all the best with making money and your investments, and I'll see you guys tomorrow in the next one.